you're looking to invest in India's growing healthcare sector but want the high growth potential of mid and small cap companies, let us see if the Motilal Oswal Nifty Mid Small Healthcare Index Fund is a fund worth considering through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this fund, let us first understand a few basic details about it. So, as an NFO, it opens on 29th October 2024 and closes on 6th November 2024. And some of the key features of this fund are it is an open-ended fund type which belongs to the category of equity, which is sectoral pharma, and it has Nifty Mid-Small Healthcare TRI as its benchmark index, and there is an exit load of 1% if you choose to redeem it within 15 days, but there is no entry load in this fund. And the minimum investment amount you need to start investing in this fund is just 500 rupees. And the fund managers for this fund are Mr. Rakesh Shetty and Mr. Swapnil P. Mayekar. And according to the riskometer, the risk involved in this fund is very high. Now, if you take a look at the investment objective, that is to provide returns to the investors before expenses, which closely correspond to the total returns of the securities as represented by the underlying index, which can be subject to tracking error as this is a passive fund as an index fund. So now, speaking of the index, let's move on to understand the index it is representing, which is the Nifty Mid-Small Healthcare Index. So the Nifty Mid-Small Healthcare Index tracks the performance of the mid-cap and small-cap stocks within the healthcare sector. So the index includes up to 30 stocks selected from the parent Nifty Mid-Small Cap 400 index based on the stock's 6-month average free float market capitalization. So the weight of each stock in the index is based on stock's free float market capitalization. And this index can be used for a variety of purposes such as benchmarking fund portfolios, launching of index funds, ETFs, and other structured products. Now let's take a look at the top 10 constituent, the top 10 holdings under this index. So they are Max Healthcare Institute Limited, Lupin Limited, Aurobindo Pharma Limited, Fortis Healthcare Limited, Alchem Laboratories Limited, Glenmark Pharmaceuticals Limited, Mankind Pharma Limited, IPCA Laboratories Limited, Laurus Labs Limited, Biocon Limited. So the highest weight is given to Max Healthcare Institute Limited and is placed in the top first position by a weightage of 13.20%, while the top 10 position is given to the Biocon Limited by a weightage of 2.94%. Now let's take a look at the index returns as on September 30, 2024. From the tabular column, you can see that in 1 year it has produced a return of 57.48, while in 5 years it has produced a return of 29.72%, and since its inception it has produced a return of 22.31%. And from the index graph, you can understand that if in short term it might have performed a little bit low, but from 2014 there has been a steep increase. Even though there are still small dips here and there, it has consistently performed well in the long term compared to the short term period. Now, as we have a basic understanding about this fund as well as the index it is representing, let's figure out whether investing in this will be right for us or not by analyzing the pros and cons of investing in this fund. So there are 4 advantages to investing in this fund. Number 1, focused on the healthcare sector. So this fund targets the healthcare sector, one of the most essential and rapidly evolving industries. Given the rising demand for healthcare services in India, this fund offers the potential to benefit from long-term sector growth. Number 2, exposure to mid and small cap stocks. So unlike other healthcare funds that might focus more on large cap companies, this fund gives you exposure to mid and small cap healthcare stocks, which typically offer higher growth potential than their large cap counterpart. And number 3 is a diversification within the healthcare sector. So though it is a sectoral fund, it offers diversification within the healthcare space covering pharmaceuticals, diagnostics, hospitals, and more. This gives investors exposure to various subsectors, reducing reliance on just one healthcare niche. And number four is the cost effective passive investment. So, as an index fund, it follows a passive strategy, which means it has lower management costs compared to an actively managed fund, and you can gain exposure to the healthcare sector without worrying about high fees eating into your returns. So, these are some of the advantages of investing in this fund. Now, let's take a look at the disadvantages. So there are four disadvantages to this fund. So one of the major drawback is sector concentration risk. So since the fund is sector focused, it is heavily reliant on the performance of the healthcare industry. So if the healthcare sector underperforms, so will the fund. So this makes it more volatile compared to broader index fund. Number two, higher volatility from mid and small cap stocks. While mid and small cap stocks offer higher growth potential, they also come with higher volatility. These companies can experience sharper fluctuations, especially during the market downturn period. Number three, limited flexibility. As a passive fund, it tracks the Nifty Mid Small Healthcare Index, which means there is no active management to mitigate risk or capitalize on opportunities in specific healthcare stocks. This might be a major drawback as well. Another disadvantage is that not ideal for conservative investor. So given the sectoral focus and the mid small cap exposure, this fund is more suited for risk tolerant investors. With a long term investment horizon, it might not be the best fit for a conservative investor or even a short term investor. So these are some of the disadvantages as well. Now, what is the final takeaway from an analysis? Was investing in the Motilal Oswal Nifty Mid Small Healthcare Index Fund worth it or not? As you can see from our analysis, that is perfect for those who wants to capitalize on the growing healthcare sector and are willing to take on the volatility of mid and small cap stocks. However, its sectoral focus and higher risk makes it ideal for long-term investors who believe in the future of healthcare. It's completely up to you as an investor to see whether it will be suitable for you or not, based on your risk appetite and the time horizon you have set for your own goals. But our personal opinion is this might be suitable for an ultra conservative investor who's not willing to invest in actively managed fund, because compared to an actively managed fund, index funds have less risk. And also, if you do want to invest in an index fund because you do not want to take risk by investing in actively managed fund, then there are similar index funds like this already out there in the market that has a lower expense ratio and a lower tracking error, where investing would be a more big advantage for you instead of investing in this fund, where comparatively other funds have lower expense ratio and lower tracking error. But if you are a risk tolerant investor and you're willing to take a lot of risk and you want your investments to outperform the market itself, then actively managed funds have potential to deliver higher returns than this fund, because as an index fund, it will only try to replicate the index as much as possible, as perfectly as possible, but it will not try to beat the index itself. But here in actively managed funds, you can have investments that can beat the index itself in terms of returns. Finally, if you do not have any idea what should you invest in, or if investing in this will be suitable to you or not, because you either do not have the time to research about it and you need some kind of professional guidance to help you navigate through the investment journey, then definitely consult with a professional like a certified financial planner who will look at the suitability of the investment objective, risk profile, overlap ratio, and allocation between the fund you want to invest in and your goals and the investment portfolio you have, and see whether it will fit into your journey, and make the entire investment journey simplified for you and hassle free for you, making it very helpful for you in the long run. Definitely invest through the professional guidance like a certified financial planner as well, which can be helpful to you. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.